Hello everyone, welcome back to Money Market Watch. Happy to have y'all back for another video. So today I'm going to be talking about buying shares of any stock and the greatest feeling of actually getting started by buying at least one share. Now, as you know, I would say a majority of people never get started in investing because they just are kind of scared, and they also just don't know how to go about it. Usually that's my number one question. A lot of people ask me, well, I don't know how to get started. And the best way to get started is to download the Robinhood app or download the Webull app. The links are in the description of this video. And once you download either app, you'll realize that it's pretty simple. All they're going to do is ask you for some of your personal information, and then of course you're going to have to link your bank account, your checking account, to either Webull account or Robinhood account, so that way you'll be able to transfer your money from your checking to Webull or Robinhood, so that way you'll be able to put money into the account so you can start buying some shares of whatever company you want to buy. So it's real simple. It's not hard. Once you download the app and you go step by step, you'll see how simple it is. Now, the thing is, once you do all that and you transfer some money into that account from your checking, and I always tell people at least start off with at least $100. Really, the minimum is like you can get started with $5, but with $5 you're limited to what you could buy as far as what companies, because most of the good companies are at least above $100, or they're like above $50. So you definitely want to at least have enough in there so you can at least buy one share of a good company. Definitely you want to start off with a company that you spend a lot of your money with. So I would give you an example. Like let's say I like to go to Wendy's a lot. So instead of just me being a consumer of Wendy's, I go buy some shares of Wendy's. You know what I'm saying? So that way, not only am I spending money with them, but I'm getting back some money for being an investor of the company. So that's just an example. If you love Starbucks, buy Starbucks. If you are constantly buying Nike products, buy some Nike. If you always buying the newest Apple product, buy Apple. So that's what I mean by wherever you consume the most money, you should start off there, because most of the big companies also pay a dividend, and a dividend is just basically every 3 months they report their earnings of how much the company made, and you basically, since you're an investor and you own shares, they pay you a percentage of that profit back to you, to the investors. So that's a dividend. So it's great getting paid that dividend every 3 months. Now, there are certain companies that pay every month. But most of those I would say are like real estate companies. So we call them REITs. Now, I will say, if you want to get into the real estate game without having to actually buy real estate, that's the best way to go, is by buying shares of a REIT. And they pay you a dividend every month. So it's like they're basically paying you whatever they're making as far as money. You're getting a percentage of it. So like I said, it's great to just get started. And I always tell people that once you buy that first share, you're going to understand how good it feels. That feeling of knowing that, man, I finally bought a share of a company, and I actually own a piece of that company by me owning a share. You understand what I'm saying? So definitely it's a great feeling. And once you get that first share under your belt, you're going to want to buy more, especially if you see when that one share alone is making you money. And it goes up from what you bought it. Now, this is the number one mistake a lot of people make when they buy their first share. Now, the one thing you don't want to do is, if on the day that you're about to buy your share of whatever company it is you want to buy, if you look and the price is up for that day, like let's say it's up like $3, $2, $1, whatever. If it's up for that day, do not buy it. Wait until a down day. Wait until you see a day when it has come down so you can buy it at a discount. You don't want to buy when it's up. The rule of the game is buy low, sell high. So even though you're only buying one share and it's going to be your first share, you don't want to buy while it's up and then let's say the next day it go down and you're down the very next day, and that's going to like make your whole mood not good. You know what I'm saying? Knowing that, damn, I just bought it yesterday and it's down today, so you don't want to feel like that, so you rather buy it on a down day. And if it goes down the next day, at least you bought it at a discount and it just went down some more. So if you have a little bit of money left, you could buy another share at even a lower price. That's called cost averaging down. So you definitely want to do that. But if it goes up the next day, you're going to feel a whole lot better. Trust me on this. So never buy on the up day, ever. Ever, 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 ever. Always buy on down days. Those are the days you want to buy. And that's the one mistake that a lot of new traders make. And I'm telling you, do not make that mistake. So, so just get started. I mean, I'm telling you, once you get started and you buy your first share, it will open up the floodgates and you're going to realize that this is not as hard as you thought it was. And you're going to realize that, man, I could have did this a long time ago. And not only that, you'll realize that now your money is working for you. And that's the most important thing of all, is that your money is working for you and you're not working just for your money. You understand what I'm saying? So definitely that's what's going to get you started in financial freedom and not having to work for the rest of your life, and be able to actually live a life that you want to live. So you gotta buy your first share. The stock market goes up and down, but you gotta realize that in the long run it always does this. So now do not I repeat, do not buy your first share of a company that's not battle tested, that's not been around for a long time, and you don't want to just buy a company that hasn't proven itself. You know what I'm saying? And what I mean by that is, like, can you imagine, I put it to you like this: your first share you should buy of a company should be a company that in your brain, you're like, that company would never go bankrupt. So I give you a prime example. Disney would never go bankrupt. They got too much money. McDonald's would never go bankrupt. They own too much real estate. And they got a million McDonald's everywhere. Apple's never going to go broke. They got too much money. Google would never go broke. Amazon. I mean, I go on and on and on, but Nike would never go broke. Like certain companies, Coca-Cola's never going to go broke. So those are the companies that you want to at least buy your first share. Is a company that's solid. It's never going to go to zero because they're never going to go bankrupt. So do not buy your first company of a growth stock or a company that's only been around for a while that hasn't been proven. You know what I'm saying? So that's the other mistake you don't want to make. So get started, everyone. Buy your first share and you will see how easy it is. And like I said, you use my link, you'll get 2 free stocks if you deposit $100 with Robinhood, and you also get 2 free stocks with Webull if you deposit $100. So out the gate, you're already gonna have 2 stocks, not including the one you're gonna buy. So it's a win-win. You know what I'm saying? So definitely nothing beats free. Okay, you guys. So get started, and then I'll catch y'all on the next video. Thanks everyone for coming to see this video. Subscribe, hit the bell so you get notified of all my videos. And until next time, peace.